Picture this. You're a crypto investor in Germany. You made some solid gains last year trading between different coins. Tax season comes around and you think to yourself, do I really need to report this? The government can't track my trades, right? Here's the problem. Since December 2020, the European Union's 6th anti-money laundering directive requires crypto exchanges operating in Germany to collect customer information and share it with authorities upon request. So if you're not reporting your crypto taxes, you're taking a serious risk. In this video, I'll walk you through 6 legal strategies to minimize your crypto tax bill in Germany without breaking the law. Stay tuned, you're watching CoinLedger. Understanding Germany's crypto tax rules. Before we jump into tax strategies, let's quickly cover when you actually pay taxes on crypto in Germany. You'll owe taxes in 2 situations. First, when you earn cryptocurrency through activities like staking or mining. Second, when you dispose of cryptocurrency that you've held for less than 1 year. This disposal rule is key to Germany's crypto tax system. Trading crypto for another cryptocurrency, selling for euros, or using crypto to buy goods all count as disposals if you've held for under a year. Here's an example. Let's say you bought 1 Bitcoin on Coinbase for 30,000 euros in January. In June, you traded that Bitcoin for Ethereum when Bitcoin was worth 35,000 euros. You've held that Bitcoin for 5 months, which is less than a year. So you have a 5,000 euro capital gain that's taxable at your regular income tax rate. But here's what makes Germany unique. If you had waited until the following February to make that same trade after holding for more than 12 months, you'd pay 0 tax on that 5,000 euro gain. 6 strategies to minimize your crypto taxes. Now, let's talk about practical strategies to reduce your tax bill legally. Strategy 1, hold for the long term. Strategy number 1 is simple but powerful. Hold your cryptocurrency for at least 1 year. Any gains on crypto you've held for 12 months or longer are completely tax-free in Germany. This is one of the most generous crypto tax policies in all of Europe. Strategy 2. Take advantage of Germany's tax-free thresholds. Your first 600 euros of short-term capital gains are tax-free. Additionally, your first 256 euros of income from staking and mining is also exempt. These thresholds reset each tax year. Strategy 3 is tax loss harvesting. If you have cryptocurrency positions that are currently trading at a loss, you can sell them to offset your short-term capital gains. One important note. This only works for crypto you've held for less than 12 months. Long-term losses can't be used to offset gains. Let's say you had that 5,000 euro gain from earlier, but you also bought some altcoins that are now down 3,000 euros. If you sell those altcoins at a loss, you can reduce your taxable gains from 5,000 euros to 2,000 euros. Strategy 4. Considering gifting cryptocurrency to your spouse. In Germany, you can gift up to 500,000 euros of cryptocurrency to your spouse completely tax-free. This limit renews every 10 years. If your partner is in a lower tax bracket, gifting crypto you plan to sell can reduce your combined tax bill. Strategy 5 is more extreme but worth mentioning. Some investors relocate to countries with more favorable crypto tax policies. For example, Malta doesn't tax cryptocurrency gains for individual investors. This obviously isn't practical for everyone, but it's an option for serious investors. Strategy 6, use crypto tax software to ensure accurate reporting. Not reporting your taxes on time in Germany comes with a penalty of 0.25% of your unpaid tax liability per month, which can reach as high as 25,000 euros for high-income investors. If you're trading across multiple wallets and exchanges, calculating your taxes manually becomes extremely time-consuming. You'll need to track every transaction, calculate holding periods, and determine which positions qualify for the 1-year exemption. If you want to save time, CoinLedger can help. You can automatically import your transactions from over 800 wallets and exchanges for free. And the platform will identify your tax loss harvesting opportunities and generate complete tax reports in minutes. Over 500,000 investors around the world use CoinLedger during tax season. So here's what you need to know. Germany has one of the most favorable crypto tax policies in Europe. if you hold for the long term. Any crypto you hold for more than 1 year is completely tax-free when you sell. Take advantage of the 600 euro capital gains threshold and the 256 euro income threshold. Use tax loss harvesting to offset short-term gains, and if you're trading actively across multiple platforms, crypto tax software can help you stay compliant and avoid penalties. You can create a CoinLedger account completely for free and import all of your transactions and preview your tax liability. You'll only have to pay if you actually want to download your final tax reports. All right, that's all for today. Thanks for watching. I'm David Kemmer.